Hey, welcome back. I'm in one of my walking videos today, and I want to share with you what I perceive to be the emerging cryptocurrency trends to expect to see during the second half of this year, the remainder of 2025. Now let's jump straight into it. The first of which is stablecoins. Now we have been hearing an awful lot about them and how they can actually be used to strengthen the fiat currencies, particularly where they are in the process of being debased, being devalued as we speak. What is the currency world reserve out there? Well, it's the US dollar. And the US government have that concern as to how we can strengthen it even further. Well, if you actually use Tether, let's say, to peg the US dollar, which is the largest issuer of the pegged US dollar on stablecoin asset, you're effectively converting the US fiat dollar onto the stablecoin rails, into the stablecoin asset. Because they play an important critical component of the broader crypto industry itself, which is all the more reason why they are doing it. And what are the benefits that stablecoins provide in general? Would enable consumers to make cross-border payments, transaction payments, rather than having to spend the typical 2.5% to 3% using credit cards like Visa and MasterCards, which takes an excessively longer time to settle. Well, you won't have any of those issues if you were to use stablecoins directly. You would enable cross-border payments much more seamlessly at a fraction of a cost and at a fraction of a second, because it's instantaneously settled on the blockchain. So those are a handful of benefits that stablecoins provide to users. But in addition to that, for me, ultimately, it is used as that gatekeeper in order to bring in the fiat capital inflows into the digital realm. And it's actually increasingly becoming an important indicator, particularly for the crypto enthusiasts and experts out there, in order to measure, well, how much of the analog fiat wealth is being drawn into the digital realm. And the first indicator they look at is stablecoins, how much it occupies that wealth in the entirety of the crypto industry realm. So for me, stablecoins is another critical component of the broader cryptocurrency industry as a whole. Now this brings into my second trend, which I'm going to see playing out even further, which is this dichotomy between crypto and AI, because the intersection of the two is rapidly becoming a major trend in 2025, with decentralized AI networks gaining attention. Now, if you think about the classical use case that I would see this playing out is really around advancing in the deployment of autonomous AI agents to help interact and transact over the blockchain network. So for me, that will be the rather obvious use case of crypto and AI playing a role together. There's that symbiotic partner between the two. And this is actually going to be even more obvious, because if we were to do that, we would effectively strengthen the actual value proposition of blockchain technology, bringing that more into the mainstream, and also would help make more efficient use of transactions, the payloads on the transactions that are being processed on the blockchain. Well, if we were to delegate that through these AI autonomous agents, it will make it more efficient payloads, make it even more efficient in terms of how we process those transactions, and even more cost effective. So I would see this AI intersection in the crypto become more prevalent in the months and years ahead. So this is going to be the magic formula where we're going to see digital economy being comprised of digital capital, which is Bitcoin, plus digital utility tokens, which could be those digital assets that we'll need in our day-to-day, plus adding the digital intelligence through AI will open up itself into a much more powerful and much more relevant digital economy in the 21st century. So that is, for me, in fact, one of the top key trends that we're going to see in the remainder of this year and in the years ahead. And also, as a final wrap to this trend, is my advice particularly on the Gen Zs, and I have actually alluded to this in one of my other videos earlier on, is the Gen Zs and the future generations after them, they ought to start thinking about specializing their talent and start building up their wealth in this brand new digital economy in order to safeguard and prosper their own future prospects, including, I would even dare so say, on the baby boomers, because when they're no longer with us, they need to start thinking about how to best effectively transfer their wealth that they've built in the analog world, where they need to start thinking about converting some of their 20th century wealth into this digital asset economy, which is going to be an expectation of their future heirs, because they're not going to be at all interested, and mark my words, on the 20th century wealth that they've built during their lifetime. So that is an important trend that I'm going to see. Now, the next one is to do with DeFi, decentralized finance. It is, or has been, one of the first promises of bringing the blockchain into the financial mainstream. But 2025 is going to shape up to be a major turning point. So if you look back on its history of DeFi, decentralized finance, for years, DeFi has actually thrived in a largely unregulated space, offering users decentralized lending, borrowing, and trading without traditional banks and middlemen. However, this freedom has led to several instances of fraud. We all are aware of the famous collapse of FTX, exploitation, and regulatory scrutiny. Well, in 2025, what we're going to see is the regulatory landscape for DeFi is going to experience a seismic shift, mostly to do with the newly regulatory clarity, which has led to investor renewed interest in DeFi to soar. There's a rather interesting report from E&Y, these are the big four auditing firms, have actually reported that there is a number of investors engaging now with DeFi, which is expected to triple over the next 2 years, rising from 24% to 75%. So you can clearly see there is a humongous growth prospect to be seen there. And it actually reflects on the sector's appeal as a way to access financial services without the need of traditional intermediaries like bank institutions and all the rest of it. And it will actually be that real test for the remainder of this year, where we're going to see that balance between innovation on the one hand through DeFi and consumer protection on the other, which is going to be an important critical success factor for DeFi becoming accepted into the mainstream. Now, this brings into my penultimate trend, which is important, is to do with secondary Bitcoin investments. What do I mean by this? Well, we're all familiar that in order to get underlying exposure to Bitcoin, it's not just for the retail users to purchase Bitcoins and then hold it on their cold wallet, hardware wallet storage and forget about it. There is other levels of getting exposure to Bitcoin. And this is what we mean by secondary Bitcoin investments. So things like, it mostly includes Bitcoin ETFs, as we all know. You've got the likes of BlackRock, you've got Fidelity, you've got ARK Invest. They all have their own ETF established shares in the various financial markets, even including futures and even Bitcoin-backed bonds, which is the latest novelty of financial products backed by or including the component of Bitcoin in it. So the actual emergence of this regulatory clarity that we are seeing is going to bring the expectation for more of these type of products, financial products, that includes Bitcoin as a component, to rise even further, which provides even more accessibility for investors to tap into Bitcoin potential without the need to deal with self-custody complexities. Now, this fueled interest and demands of the sovereign nations is launching their own national strategic Bitcoin reserve equivalents, not just the US. We all know about President Trump have just signed their executive order to announce the US strategic Bitcoin reserve, but also there are other nation states doing the similar sort of thing, but in their own territories. So the appeal of Bitcoin secondary products is rather clear and obvious. Public companies have purchased almost 3.5 times more Bitcoin in 2025 than the total new Bitcoin supply mined this year. So the supply shock has been set, and Bitcoin price is expected to explode as a result. And in fact, we're already seeing signs of new all-time highs for Bitcoin price. So this is going to be exacerbated even further. This brings into my final trend that I expect to see. And I've mentioned this again extensively in my videos and my channel, and it's to do with RWAs, the tokenization of real-world assets. RWAs is trending in 2025, that's rather obvious, and it actually involves transforming how traditional assets like real estate, commodities, stocks and bonds are issued, managed and traded on the blockchain networks. Making these assets that were once illiquid, like private real estate, can now be easily bought, sold or even fractionally owned by a global audience. That is the benefit of real-world assets tokenization that it brings to consumers. We're going to see this trend, therefore, to pick up speed and momentum as major financial institutions like BlackRock, Goldman Sachs and JP Morgan start embracing it and embrace RWA tokenization. And we also have analysts corroborating this, such as the one at Van Eyck, where they estimate that RWA market could exceed $50 billion alone by the end of this year, 2025, but with the potential growth to $10 trillion by the year 2030. So as regulatory clarity improves and more investments are drawn, seeking that efficient, more blockchain-powered ways to access traditional assets, RWA tokenization is indeed set to become a fundamental part of the brand new digital economy. So as you're starting to see from this video, and apologies if I've been dwelling on for quite a few months, but I felt it was very important to elaborate each and every one of these 5 critical trends impacting the crypto industry. You can see quite obviously that it's really hard now to ignore and not to invest in this space, which is all the more reason why you need to do that research. You need to start allocating part of your wealth into these emerging digital assets. For me, digital capital is Bitcoin. So if you're thinking about how to preserve and even grow your capital in the long run, then I would suggest as a form of digital capital to be investing into Bitcoin and hold into the long term. If you want to also, in addition to that, to get involved and invest in one of the emerging digital utility tokens, then you might be worth investigating some of the emerging digital asset tokens. You've got plenty out there. I'm not going to bore you with the details, but you need to do the actual legwork and homework just to ensure that they cover your immediate needs, short-term horizon needs, because if the expectation is to make money out of it, well, this is where you need to be rather cautious. But there's clearly a business to be had because, as I mentioned, things like real estate, arts and collectibles, even commodities, precious metals, even your favorite basketball team or football team, those are in the process of being tokenized onto the blockchain. And where that is happening, and particularly where there is a growing economic value attached to those tokenized assets, well, clearly there is a business to be had there. And that is what I meant by treating those assets as more of a short-term digital utility type asset investment. But you need to do that homework and research. And to round off that equation is digital intelligence, artificial intelligence, AI. We need to start getting used to using ChatGPT, Microsoft Copilot. There's a handful of other ChatGPT-like tools out there that we ought to start familiarizing ourselves, to start using in our day-to-day lives, because again, there's no ignoring it. We need to start investing our time, beefing up our skill set into crypto and AI is going to really pave the way for a more prosperous, buoyant future if we want to survive in this rapidly emerging competitive environment which is planet Earth. So digital economy is here to stay. There's no escaping from it. You might as well jump into the bandwagon, that and that of your family and future generations to come, because there's no avoiding it now. So hopefully, if you enjoyed today's episode, please don't forget to hit the like button, to share the video to colleagues and friends, and if you haven't done so, to please subscribe to my channel, as I regularly publish some interesting videos such as these, including walk-in ones, to do with Bitcoin, blockchain technology, and the future of finance. So till next time.